Broadcast is now starting. All attendees are in listen-only mode.
Well, hello everyone. This is Brian Sachs. I guess before we start, if you could just type into the chat whether you can hear me okay and you can see the screen. Just type a yes or no, Y or N. Okay, so I'm assuming everyone can hear me and I'm assuming everyone can see the screen. If you can, again, just please type yes or no. I haven't gotten a yes or no from anybody. So if you could, oh, beautiful. Thank you, Francesca. Thank you all for being here. And thank you, Constance. If you haven't heard yet, guess what? The Fed dropped interest rates about an hour ago, 0.5%. And before we even go into everything we're going to cover, that's really very critical because what it means is more people are now going to be thinking about listing their home, and hopefully there'll be more affordability for buyers. And so this is really a perfect time for what I wanted to share. And what I want to share with you are ways for you as an agent to be able to sell more homes, because that's what you're in business for, right? And that's what our partnerships are all about. So I'm going to go through a lot of programs that you may or may not be familiar with. If you're familiar with it, just indulge me. But I hope you all leave here with some ideas and even some marketing ideas. For those of you that, and I see people still coming in, for those of you that don't know who I am, I've been in the industry for 38 years. I've been the in-house loan officer for WBAL NBC for about 20 some years and written articles for various publications. I've taught many courses at the board of Realtors. I only say all this because I actually started as a real estate agent. And so I understand what you go through on a daily basis. And that's why I approach everything more as a partner and as a relationship than just a real estate transaction. Because here's the reality of it. When you trust a loan officer with a loan, or a borrower, I should say, what are you really trusting them with? You're literally giving me your paycheck and saying, hey, Brian, I'm referring a buyer to you. Here's my paycheck. Please make sure I get paid. And number two, you're trusting me with your reputation. And that's something not all loan officers realize, but it really is critical. And it's how I approach our relationship. Again, anybody can say anything about anybody, but what other agents say about you is even more important. Constance, you're actually here. So Constance is someone I've worked with for 30 years. And so I thank you for having said that, Constance. Here's Harriet Charkatz from Long and Foster, Ken Roach. He actually just moved to Berkshire Hathaway, but he was a top agent for Coldwell Banker for 30 some years. So it's important what your clients say about you. It's important what other agents say. And I just wanted to share a little bit of that with you. So what are we going to talk about? I'm going to try to keep this to an hour. For those of you who know me, you know I like to talk. But my goal here really is just to arm you with ammunition and give you some marketing ideas so we can all be successful together. And so what are we going to cover? We're going to talk about a lot of buyers who were sitting on the fence, right? For the last couple of years, it's been pretty ugly, waiting for them to jump off. How to get money for your clients and good PR for yourself. I'm actually going to be able to give you a website. If you stay to the end, we're going to talk about a program that not only gives you a resource, but also gives your buyers money and a way to get cash from friends and relatives without needing a gift letter. We're going to talk about self-employed buyers, buyers with a lot of cash but may not have a lot of income. 1099 buyers, that's you, by the way, folks. Realtors are 1099, and there's ways of not needing to see your tax returns. We're going to talk about investment properties. We've got a lot to talk about. So let's just jump in. I want to tell you about buyers that are on the fence, buyers that are waiting for rates to continue dropping. Here's what you need to explain to them. The rate will continue to drop, we think, but here's the problem. When the rate drops, what's going to happen? Home prices are going to shoot up, and we're going to be back to the scenario of multiple offers over asking price with appraisal gaps, no home inspections. We've been there. We know what that was like, right? In 21 and 22 and 20. So you need to educate the buyers and let them know that really what we're saying is marry the house and date the mortgage. And we have a unique program at CMG. It's called Rate Rebound. And we will give you a no charge, so nothing hidden, nothing up our sleeve. We will give you a no cost refinance, no lender charges at all, not a penny. Anytime from 6 months up to 5 years after you settle. So you can refinance anytime, as many times, as long as the rate is 0.5% better than the rate you currently have. We charge zero, and we will also give you money towards to offset some of the title costs. So a great product. If you have people on the fence, here's a great way to get them off. Here's a program that you all should be taking advantage of. This is called Home Funded. And basically what we will do, it works almost like a GoFundMe page. We will set up a page for you as a real estate agent, and we will set up a page for your buyers where all of their friends, family, enemies, anybody, neighbors, coworkers can actually contribute money to them without needing a gift letter in any amount, and we will match it up to $2,000. So where's a good place for you to market this? There are all sorts of, like wedding fairs and things of that nature where brides and grooms may be going to, look at photographers, wedding places, and part of this may be they're going to buy a house. And so if you sign up for this, afterwards, I'm going to give you my contact information. But again, my job is to be your partner and provide you with tools that help you sell more homes so we can do more loans. It's really a pretty simple motivation. This product is excellent, and it's unique to CMG. Let's talk about buyers with credit challenges. Oftentimes we have buyers that think they have to wait 7 years, 10 years, 2 years. The reality is that there are products and programs for buyers 1 day after a Chapter 7 bankruptcy, 1 day after a foreclosure, 1 day after a short sale. And I'll just tell you a quick story. I did a loan for a lady who was a NICU nurse at University of Maryland for 28 years, I think she was, which is a really hard job. She had a husband who was abusive, gambled. He did all sorts of drugs. Not a good guy, right? And she had to file bankruptcy. She lost her house. And at the same time, her daughter with 3 kids was getting divorced from a different abusive relationship. And her goal was to get into a house and bring her daughter and her grandchildren and all live together. Well, she had a foreclosure and a bankruptcy, right? So she came to me and I said to her, we can help you, but you're going to need to put some money down. She said, but I don't have any money. I just went through a foreclosure and a bankruptcy. And I said, but you've been working at University of Maryland as a NICU nurse for God knows how long, almost 30 years. Don't you have a 401k there? She said, yes. She had $400,000 in it. And so we were able to get her into a house. Yes, it was a higher rate, but We were able to get that accomplished. And 6 months after, once she met the criteria for the foreclosure and the bankruptcy, we were able to refinance her to a low, attractive interest rate. So don't lose buyers who've had a bankruptcy foreclosure. I mean, short sales really aren't an issue anymore, I don't think. And a lot of your lenders will tell you FHA and VA, you have to be discharged for 2 years. It's just not true. The guideline says if you're discharged for 1 year and you've reestablished credit, and we can show that what happened to you was an extenuating circumstance, we can get you into a home. So, and a Chapter 13, by the way, you don't even have to be discharged. You have to be making your payments for 1 year. You have to get the approval of the trustee. And of course, that debt's going to be counted against you. So, I see a lot of real estate agents that I come in contact with that are renting now, and they're renting because they're writing off a lot of expenses. In fact, I'm doing a loan right now, literally today, for an agent who's been in the industry 20 some years. And she's looking to actually refinance, but she wrote off almost all of her income last year in expenses and didn't know what to do. So I'm going to tell you there's a segment of the population right now, not only realtors, that are what we call in the gig economy. They are 1099 workers. And the gig economy makes up a large segment of, of the population. And so if you have an opportunity to talk to CPAs, accountants, financial planners, bankers, credit unions, a lot of times these folks may be able to refer you to clients who they didn't think could get a house. And you could tell them, I'm a realtor, I'll find them a house. And I have probably the best loan officer in the state of Maryland, and he'll help them get into that house, even if they write off a lot of expenses. So who are these people? Let's talk about it. Waiters, waitresses, dancers. I bet you every one of you have gotten a client at some point that was either a Uber or Lyft driver, or doing, what's the one where they deliver the food? Etsy shop owners, travel agents, accountants, just trying to broaden your horizons here. Home daycare providers, tutors, caterers, chefs, musicians, real estate agents. How about that? I just did a loan for a lady, and let's just say she was in the adult entertainment industry. I'll leave it at that. And she was a heck of a dancer, but we got her into a house. So there's all sorts of these folks. If you go to church, that pastor might get a 1099. That's what I was thinking of. DoorDash, nurses, private aides, contractors. The list is endless. But here's the way the program works. We will look at the gross income over the last 2 years, and we will take off a flat 25% for expenses. And so if you made 100, we're going to count 75 if that's what it averages. Great product, and something you should all be aware of, because I know a lot of agents, when you get someone that's an Uber or Lyft driver, you don't really think that they're able to get a house. But here's some examples. We're going to average 2 years, and then we're going to take 75% of that. The beautiful news with all this, in addition to that, is you don't have to have perfect credit, because not everyone has perfect credit. Do you know that 60%, I saw this statistic, over 60% of Americans have a credit score of 660 or below? So here we could do this program with 10% down, up to $1 million, and a 660 credit score. Many times you have buyers who are self-employed. And a lot of times these self-employed buyers, just like 1099 people, are going to be writing off a lot of their expenses. And we can do loans without needing to get tax returns. In this case, we'll take off a flat 50% of, and here's how it works. There's no tax returns, but we look at the money going into the bank account over 12 months. So we're going to need 12 months of either personal or business statements, whichever one you have, wherever you're putting your money. And we're going to take off a flat 50%, and that's the income we're going to use. Okay. So, again, there are uh, situations for everyone here. Here's a sample. Total deposits 420. We're going to take 50% of it as 210, and that's the income we're going to use to qualify you. Once again, you do not have to have perfect credit. 660 is not perfect credit, not terrible, but certainly not wonderful. Um, Now, there's a whole segment of people that have a lot of money and they have no income or low income, especially seniors. I do this program with a lot of seniors. They have a lot of money tucked away, but they're only living off their Social Security and a small pension. Well, we can still buy a house. It's an asset-based program, and we will lend them. It goes 125% of their assets. And if any of this is confusing, obviously, I want you all to call me after this anyway. But just know that if you have buyers with a lot of cash and not a lot of income, we can help them. So again, they also don't have to have perfect credit. We can go down to a 660. I want to also share with you a challenge you're going to probably have had, and it's probably the most misunderstood loan ever in our industry. It's called a FHA 203K renovation loan, and we are the #1 lender in the United States of America for this product. And oftentimes, especially in the market I think we're about to go in, you're going to have sellers who don't want to make repairs or homes that won't pass FHA or VA inspections. And what this does is it allows the borrower to borrow money to buy the home and do the renovations. And I'll tell you on FHA, a little sneaky trick, they lend 110%. So follow this. They'll lend 110%. So if you think a home is going to underappraise, I've had situations where we've done FHA and the buyers just borrowed an extra 5 or 10,000 to do some minor cosmetics just because we thought it was going to underappraise and we didn't want to let the deal fall apart or have to have the buyer come up with extra money. Something my wife says to me all the time, I love ugly. But these ugly homes, they may be great homes in great neighborhoods. Constance, who's on our call, we did 2 of these in the Randallstown area together. And both of these buyers fixed up the home beautifully. And each of them had like $30,000, $40,000 worth of equity. They were able to choose the cabinets, the flooring, the appliances, the paint colors. It's a beautiful thing. And you walk in with equity. And oftentimes you have so much equity, we refinance you out of that loan into a conventional loan 6 months or a year later. I'm not going to go into all this because, this isn't a continuing ed class. This is just really meant to just help you do more business. I mean, that's why I did this. But the truth of the matter is, keep this in the back of your mind as a tool. A lot of mortgage companies are excellent. We're not the only great mortgage company, but a lot of mortgage companies don't have the expertise in this particular product. And a 203K loan is a loan that can go south really, really fast. And so if you're going on a listing appointment and that house needs work and the seller is obstinate and the seller wants to have their asking price and they don't want to make repairs, how many times you run into that, right? They want all the money and they don't want to do anything for it. Well, there's an option here that this 203K could be a solution. There's also another program that I'm going to tell you about. It's called the Officer Next Door or Good Neighbor. And the way this program works, I don't even have a slide for it, but I'll tell you about it. This is for teachers, fire personnel, EMTs, police officer in Baltimore and in Maryland, the MTA, the Mass Transit Police use this a lot. They could buy a home 50% off. It's a bidding process. And there's only homes that are on the HUD list are the ones that you can bid on, special lists for this. So you can't do it on just any house. But if you're the winning bidder, let's say you get it for 200,000. Well, they will give it to you for 50% off. So you'll have 100,000. You can roll in all your closing costs, all the real estate commission, all any and all renovation costs, and you can get into that home for $100. Now, how many of those are you going to actually do? Probably not many. Excuse me. But because it's a very limited list of homes. But what a great marketing tool, right? To go market to firefighters, nurses, teachers, great, great product, police officers. Um, so here's, if you want to just take a big snapshot of the screen here, I think my record for a renovation loan was 40 days, but most of them usually take around 60. You have to have licensed contractors, depending on the amount of your repairs and the extent of the repairs. You may also need to have an FHA HUD 203K inspector involved, and we can give you some names for those folks as well. And again, we protect the buyer because the money gets doled out in chunks to the contractor. We vet the contractor. We need to know what they're charging, what materials they're using, and a draw schedule. So they're not just going to get their money up front, right? And sometimes this is a great thing to do, even if you have like a bad inspection, but your buyer still wants the house and the seller refuses to do anything. So I'm going to move past all this because, we're going to make sure that the contractor's licensed. We're going to make sure they have the financial wherewithal. That's FHA. That's called a 203K renovation loan. But many of you may not know that there's such a thing as a Fannie Mae home style loan. And this is a conventional renovation loan. Excellent, excellent product. Works almost the same way. You don't have that 110% on a Fannie Mae home style. FHA will give you 110%. Fannie Mae home style goes by really what the appraiser is going to tell us. But here's a big idea for you if you're working with investors. Sometimes you have investors wanting to do these fix and flips, right? Now, if they have time, fine, the home style renovation loan might be a good product. If they bought the house on auction, they have to settle in 20 days. This isn't the right option for them. But you can do an investor loan with 15% down and add on top of that the home style renovation on an investment property. Again, it's as long as they have the time. If they need to settle quickly, this isn't the right way to do it. Probably you need hard money. If you want to take a snapshot of this is sort of the process. You get pre-approved for a reno loan. You go house shopping. You should have chosen your contractor, and then we begin the process. Everything that I'm sharing with you here, I can provide you with flyers so that you can use this as well. So how about this? Look at this. What if you, now pretend you're a realtor and you're talking to a buyer. What if you could own a property, have someone else make your payment or cover your payment, to be fair, have an investment property and the side hustle income that throws off tax benefits? Well, that sounds pretty sexy, doesn't it? And you can. See, it's all sometimes just in the presentation. So what I would tell you is this is a terrible side view of me on NBC, but I guess the other side may not be much better. So you can copy that. That's the YouTube of me discussing this. But you have a lot of buyers and they come to you and they go, I don't know if I should buy an investment property or if I should buy a primary home first. Type yes in the box or no if that's ever happened to you. Ever have a buyer come to you and go, I don't know if I want to do an investment property first or buy a home to live in first? Anybody? Okay, well, the truth is you could do both. And I'm going to share with you how you do that. Um, a great way to do this is to buy a 4-unit property. FHA will allow you to buy up to a 4-unit property with 3.5% down, as long as you're going to live in one of the units. VA, you could do it with no money down. Conventional just changed. It was 20 to 25% down. Now you could do a conventional with 5% down. Hopefully your tenants in the other 3 units not only cover what your payment is, but they also throw off a side income. And because the other 3 units are considered investment property, you will get a tax write-off. Now, I'm not an accountant, and I don't think we should be giving tax or legal advice, but um, they can check it with their accountant or attorney. But I mean, here you go. If you had a 1 unit with 1,200, another with a 1,500, another with 1,500, and your mortgage payment is 2,300, you're making $1,900 a month without leaving your sofa, and you're getting your mortgage payment covered, assuming you're at full occupancy. Just so you know, by the way, 4 units is considered residential. The 5th unit and above is considered a commercial property. Now, you got to be fair, right? Because all that sounded really sexy and good, but there's a downside to owning a 4 unit. You're going to be a landlord. You have other people living in the property. But I mean, if you live in an apartment building, you have other people living in the property. So, take the upstairs unit so nobody's above you. You're going to need to make sure the property is owned correctly, and now you will be responsible for all repairs. Um, so, uh, again, make sure here are the things to make sure of. If you could buy it below market rents, that's even better. If you can make sure there are separate meters, that's even better. When you're renting out a property, you could be sure that person has their window open in the winter with the heat blasting. So again, conventional just changed not long ago to 5% down, FHA 3.5% down, VA 0 down. And you can I wrote a book about this. It became still is a bestseller on Amazon. If any of you want to hit me up afterwards and get a free copy of my book, I'm happy to give it to you. It's called The Real Estate Loophole. And if we build a partnership together, you can promote the book. I'll let you write the opening for it if you think it would be a good marketing tool, and we can be co-authors of it if you like. Now, here's the question: are investors still buying? Damn right they're buying. They're buying everything. And so we have some creative products for investors. What do you do if you want to hold title in an LLC? A lot of investors want to take that legal burden off their back and protect themselves a little bit, and they want to hold title in LLC. What if you're in the underground economy and you work for cash? Maybe you're even in home improvements and you work for cash. What if you don't have perfect credit? Can you still buy an investment property? And the answer is yes, 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 yes. Um, we have a great product. I mean, one option, of course, is a hard money loan, and I do have some hard money lenders. I don't make anything. I can just refer you. That will lend you the money. You're going to pay higher rates, higher points, and it's short term. But this program, what it allows you to do is purchase a property, and it's called DSCR. There's all different levels of it, but the one I use commonly is they want to make sure that your rent, and an appraiser is going to go out and tell us what the rent is. They want to make sure that your rent is $1 more than your mortgage payment. You can buy up to a 4-unit property. They usually want to see 6 to 12 months of your mortgage payment in reserve. And they also want to see that you are seasoned, that this isn't your first investment property. So that you've either managed rental properties as a realtor or you've owned investment properties. I'll tell you that I took a loan right before I jumped on this call. and the person had a 752 credit score, I believe, and the rate we were quoting today was really kind of phenomenal. It was 7.75. I mean, like, considering this is a no income loan, we don't even ask income questions. Um, you, depending on how much you're putting down, you can go down. Look at this. You can go down to a 620 credit score. 620 is kind of a stinky credit score. It's sort of like the bare minimum threshold. So the better your score, the less you have to put down. And we do have options with actually 10% down. So this is called our DSCR Investor Cash Flow Program. It's a great, great product. Again, you do have to have reserves. And we do have somewhere, even if it's a break even, where the rental and the mortgage are the same. So, as I said before, I'm all about partnering with you. And I want to make sure we're a good fit. I have at least two of my favorite realtors on here that I see right now, but many more of you as well. And if you haven't worked with me before, call me and let's talk about how we can help. We can help you with educational flyers. We can help you with program flyers, open house flyers, single property websites. We can help you with guarantees. We talked about Home Funded, where we'll build you a website, and then any buyers that are attracted to you and come through there, we will build their GoFundMe type page so all their friends can, you talk about building buyer loyalty. Imagine this. You're giving them a website so all their friends can donate to them. I mean, I think that's almost like cement, right? And then you have a lender who's going to give them up to $2,000 towards closing. I do a lot of videos with my realtor partners for their YouTube channels and podcasts on these various programs. We have an on-time closing guarantee. For those of you that know me, I always like to over-deliver and under-promise. And then we have programs. If you say you're just a listing agent, we have programs to help you sell your listings. One of the things I didn't mention here, we are experts in condominiums. We have an entire condo department that's gotten many difficult condos approved. And I have listing agents that I work with who really don't sell very many homes in a year. They're just listing agents, but they always refer me to potential agents and buyers of their listings in condos, or have other agents who do this for properties that they know are going to need a renovation loan. So we've got plenty of things to help you get listings, social media posts, lots and lots of tools. And we're happy to be your partner. Remember, I take this very seriously because the way I look at this is you are trusting me with your paycheck. I mean, that's a lot of trust. You're trusting me with your paycheck. You're trusting me with your reputation. And for the last 39 years almost, that's something I've taken very, very seriously. So this is really my banner, but it really is how I feel. Get the service and expertise you and your clients deserve. Talking to a robot in a machine or a call center in Wisconsin may not be the best move. Here's how you reach me. Call me. I'm happy to talk to you. Or if you want, go to my Calendly and let's set up a time to chat. We may not be a good fit. We may be a good fit. I don't know. Let's see. So I hope I've given you some ideas. I hope I've given you some knowledge that you may not have had prior. Again, I didn't want to take up everybody's day, but I did want to just share. I thank each and every one of you for being here, and I hope we have an opportunity to work together.